See my, I don't know, see my internet kind of going on and off, but I haven't lost connection to you guys. So I don't know if it's just my laptop messing
Good
around.
morning.
Good morning. Hopefully we don't lose internet. I'm going to start in probably about 30 seconds or so. Give a couple more minutes only because we got a lot to kind of go over today. A lot of news that came out in the last couple of weeks, and then also going to talk about hometown heroes in depth towards the end. Alrighty, perfect. We'll get going and we'll let people in as they start to show up and know what they want. Good morning, good morning, good morning. Hope you all had a great weekend. Hope you had a great last couple weeks as well. I know last Monday was Memorial Day, so we didn't get together. Hope you guys had a great Memorial Day weekend as well. But it's June. I mean, it's almost halfway through the year already. So hopefully you guys are cranking up and you guys are getting some clients in and getting ready to get some closings done. Yeah, I'll find a better way to have people. Okay, here we go. All righty. So PCE, personal consumption expenditure, it came in last week for the month of April, and it showed inflation rose 0.3% month over month from March, with the year-over-year reading staying at 2.7%. Core PCE, which strips out food and energy, rose by 0.2% and stayed at 2.8% year over year, which continues to stall the Fed's 2% target. For those of you who don't know, consumer price index, PCE, and producer price index, those are three different things. The one that the Fed is typically looking at is PCE, personal consumption expenditure, which the difference between that and consumer price index, which is usually the headline number that a lot of people look at, is PCE actually measures the amount of consumption that people are doing month over month and year over year, to CPI, or consumer price index, showing the change in prices month over month, year over year. So it's a little bit different. As well, the reason why inflation in this case can increase month over month and stay the same number year over year is because it's on a rolling 12-month period, meaning that March 2023 to April 2023 was also an increase of 0.3% and 0.2% for core, and it's just replacing those numbers for the previous year. So you'll see those numbers go up month over month, and then the year over year number stays the same as opposed to increasing. It's just because all we're doing is we're rolling on a 12-month period, and you're just replacing those numbers as they come along from the previous year. Existing home sales, which measure closings on existing homes, fell 1.9% in April, and they're down 1.9% year over year, while inventory rose, showing 1.2 million homes for sale, which is a 16% increase from this time last year, and that's about a 3.5 month supply. So existing home sales didn't fall so much from March, but you're still seeing inventory starting to grow. Sellers are getting rid of homes and putting them on the market now. So we're going to see that actually in summer as well. If assuming that buyer traffic or buyer sentiment, really, I would say, doesn't pick up, that inventory number will grow, which will help us in a buyer's market, or help lead us into a buyer's market. New home sales, which measures closings on new homes from builders, fell 4.7%, and they're down 7.7% year over year. They show 480,000 new homes for sale as of April, which they claim that is a 9 months worth of supply, the 480,000 homes. The problem with that number is that 101,000 of those have not even been started. 281,000 of them are still under construction, and the completed number, the actual number that somebody can close on and live in that property, is 98,000. Pending home sales, which measures contracts on existing homes, shot down tremendously month over month, down 7.7% in April, and they're down 7.4% year over year. So pending home sales, not the same thing as existing home sales. Existing home sales are actual closings. Pending home sales are contracts, which means that what pending home sales is telling you in April means that May is not going to be a good month for existing home sales typically, right? It's a forward leading indicator to what those closed contracts are going to look like the next month. Case-Shiller Home Price Index also in for the month of March, which is the index we like to use since it's considered the most accurate. Month over month appreciation increased 0.3% and is up 6.5% year over year. Mortgage applications show purchase applications are down 10% from this time last year, and refinances are up 12%. And we're measuring mortgage apps more this year, since last year was one of the worst years in mortgage origination in history for mortgage originations. The comparison from this year to last year will really tell us in real time how well or how bad this year is doing. And so far, it has been shaping up to be a worse year than last year. Mortgage delinquencies. So there's a lot of talks about foreclosures increasing, people being behind on their mortgages and stuff like that. The real data shows that early stage delinquencies, which is when you're late 30 to 59 days on your payment, accounted for 1.5% of all mortgages, up from 1.1% last year. Adverse delinquencies, which is that 60 to 89 day period, stayed at 0.4%, which was up from 0.3% last year. And serious delinquencies, which are loans 90 days or more overdue, were at 0.9%, down from 1.1% last year. The foreclosure process affected only 0.3% of mortgages, which has pretty much been the same for 25 straight months. And it's a sign that mortgage performance remains strong despite the small upticks in delinquencies on a yearly basis. A lot of these people, a lot of people with mortgages, they have really, really low rates on their mortgages. So you're not going to see them kind of go behind on their payments, because the one thing that has saved them while everything else has increased has been that mortgage payment, right? What's going to be interesting, I think, I was thinking about it last week, is how it looks forward in the coming years, moving forward past this low rate environment as people are taking on higher rate loans while also dealing with inflation. Are those going to be the ones that increase over time? Especially when we know that the first year clients get hit with the higher tax bill, don't understand how they can get around it, stuff like that. So maybe in the next 2-3 years, we'll see an uptick. I don't think it'll be tremendous to the point where it's another crisis, but it will probably be right around average or right above average, in my opinion. Rates are improving as well. What's not improving is the 10-year treasury. So not sure if you guys remember, a few weeks ago, I spoke about the spread between mortgage-backed securities and 10-year treasury will start to shrink as long as the Fed is not allowing as many bonds to roll off their balance sheet as they were before. When they had the Fed meeting, I think it was late April, early May, they were talking about not allowing as many bonds to roll off their balance sheet. And I said, everybody was focused on them not increasing rates, or if they were going to lower them or staying unchanged. And the biggest news that for me, what I got was that, because the last 2-3 years, as they've been basically rolling bonds off of their balance sheet and creating more supply in the market where there's not enough people to purchase those bonds per se, the spread between mortgage-backed securities and the 10-year treasury has increased an extra 1%. So historically, usually the difference between the 10-year treasury and rates is usually 2%. Give or take. The last couple of years, it's actually been 3%. So that's why when the 10-year treasury would go to, let's say, a 4 or to the number 4, which means that that's your rate on return for buying a 10-year, rates were at 7% last year. It was literally just like that, 3% difference. Right now, the reason why I say rates are better is because right now the 10-year treasury is at 4.5. Last time the treasury was at 4.5, rates were at the high 7s, low 8s. Right now, rates as of today are at on average 7.17 according to bank rate. So you're seeing that difference kind of shrink even as the 10-year treasury increases. Mortgage rates, they may increase a little bit, but they're staying pretty steady. And the difference between rates and 10-year treasury are minimizing, or that spread is shrinking. If it shrinks to what historically it has been on average, which is 2%, then technically that would mean that if the U.S. Treasury is at 4.5%, that means that rates should be at 6.5%. That's usually how it's always been historically, and we're seeing that kind of come down, which is a good thing. Hometown Heroes updated income limits are out. You all should have received a copy of the new ones, but I'll let you know at least what the Tri-County is. Broward's at 158,400, Miami-Dade's at 170,250, and Palm Beach is at 160,560. So those are the new income limits for the Tri-County area, but I sent you all an email with the full state. So if you have clients in other counties, or you're in another county and that's your farming area, you should have those updated income limits. If you don't, after Monday Mortgage Minute, just shoot me an email and I'll send it over to you. Now, I do want to go over some specifics on Hometown Heroes for those of you that are still not all that familiar with this program or any of the programs provided by eHousing, only because there's still I still get a lot of questions that I think people are curious about or don't know exactly, and really kind of hurt their business by not connecting the client with the loan officer right away. And I tell you guys this all the time. We don't care about if the client is ready now or in 12 months. If somebody says that they're looking to purchase a home, you introduce them to us. Let's have a conversation with them, because there's going to be things that you don't know that we're going to be able to overcome with the client, right? And this is just an example here. For Hometown Heroes, you got to be a first-time home buyer. You got to be a full-time employee in Florida, 640 FICO, right? It's 5% down payment assistance up to $35,000. And there is no purchase price limit, only loan limits, which are the local conforming loan limits already in place. FHA's local conforming limit is $621,000. Conventional is $766,650. So as long as their loan is there, they can qualify for Hometown Heroes, which means that purchase price FHA is around $640,000, $643,000 if you're doing 3.5% down. And then for conventional, purchase price should be at about $785,000, $790,000 if you're doing 3 to 5% down as well. Everything is done in-house by the lender, which means it can close as quickly as we need it. This is obviously once the program is out in July. Right now, we've got to put that closing date for July 8th because of when the programs are open July 1st, you still have to, at that point, lock in the rate with eHousing, and then compliance, you got to send a loan estimate, and the next day you send the closing disclosure, and then you can close after 3 days after that. But other than that, once that program is out in July, if we need to close in 2-3 weeks, you can do that with this program. You don't have to be a Florida resident, okay? Meaning you can be moving down here as long as you will be working for a company that has a brick and mortar in the state, you're fine. So if you work for one of these national companies, right, FedEx, one of the airlines, anything like that, Amazon, and you're going to be transferring down here, and you're a first-time home buyer and you're looking to purchase in the state of Florida, you can qualify for this program as long as you're going to be full-time with that company. You can also be self-employed. Okay, all they ask for with somebody that's self-employed, there's 2 things really. One is making sure that that property is registered on SunBiz, obviously. But if you're 1099, Schedule C, sole proprietor, that person that you're getting that 1099 from, or that company 1099 from, should show a brick and mortar here in Florida. And then you just need a CPA letter from your accountant, basically stating that you are actually full-time as a self-employed person. You do not pay tax stamps, which saves the client even more money. And this goes for every program that eHousing has, okay? I put clients into down payment assistance, to these programs specifically, as much as I can, because it ultimately will benefit them closing cost-wise, right? My biggest thing when I'm talking to clients, even if they're doing a normal loan, is the aspect of how much you're paying for closing costs with where the rates are right now, right? Paying points and stuff like that. with these programs, they set what the rate is, and then they also don't allow you to or don't require you to pay any points or anything like that. So it's a good and a bad thing because you can't buy down the rate, but most of the time, especially with Hometown Heroes is below market rate. Florida Bond is right around the market rate either way usually, and they both work. But also that the fact that they don't pay tax stamps also saves the client money. So usually when you're buying a home, right, you have your lender fees, you have your appraisal, credit report fee, all that stuff, and you have your title fees. And then right under your title fees on the loan estimate, it's your taxes and government fees. Anything that any person that uses e-housing will only pay one fee on there, which is the recording fee, which is usually like 280, 290 bucks, as opposed to paying tax stamps on the transfer, which could be about anywhere between $1,500 to $2,500, even sometimes $3,000, depending on that purchase price. And that saves them that money as well. Like I mentioned, you can buy down the rate, but you also don't pay anything for it. And we know in this market with where rates are paying, with where rates are, paying points is normal, and this removes that. So that also lowers a person's cash to close tremendously. It's only considering income that is on the application, not household income, where you have to include income of everyone living in the home. So if you have a husband and a wife, they're both first-time home buyers, and the husband makes a decent amount of money. And if we add the wife to the application, they will pretty much be over the income limit. Well, we can just do it with the husband on the loan, as opposed to if we were trying to do something like Florida Bond that considers household income, they would still consider the wife's income in that as well. So it's whatever's on the application, which means that it's also whatever I put in. Okay, that's another key point. A client may say I make $200,000 a year, but their base salary may be 120, and the other $80,000 that they get could be from overtime, bonuses, commission, or something like that. I don't need to use that income to qualify them. Okay, very important. Even if a client has the money, I'm hearing a lot of them saying it's another loan. I'd rather just come in with the down payment. While it is true, it is another loan. It is 0% interest. So a client can be thinking about coming in at 5% down conventional. They have the money saved and everything. What I'm saying is, why not use Hometown Heroes and have Hometown Heroes cover the other 5%? So now you're coming in with 10% down, especially if you're getting if you're going conventional as opposed to FHA. Your mortgage insurance is going to be cheaper because now your loan to value is 90, even though your combined loan to value is 95. And that'll cut down on your first loan as well, which you're paying on your first loan anyway, probably anywhere between 6.5% to 7% interest on that first loan too, right? The true downside is the fact that you cannot make payments on it, and it is deferred, so it will always count against the equity that your home gains. But you can leverage it right and refinance in the future and pay it back. It is an equity eater, okay, which is what we try to tell clients. That means that in 6 months, if rates come down, you may not be, if you're coming in with no money, like you're depending on Hometown Heroes, Florida Bond, right? What happens is you're over leveraged because you're technically now above 100% loan to value. So we know that home prices are going up. You're eventually going to get that equity, but it's going to take you a little bit longer. So you might have to wait more than 6 months to a year to be able to refinance. That's the true downside to this program, is you have to wait, or you will have to come out of pocket whatever your closing costs are at that point in time to be able to leverage that loan to value that you need. However, everything else is a pro, in my opinion. So any questions that you guys do have when it comes to any programs, not just specifically Hometown Heroes, any other down payment assistance programs, whether it be city, county, or not even down payment assistance programs, renovation loans. I did 2 last year. I did 1 the year before. We need to understand those processes. As when you have a client that says, I want to purchase a home, you can do your filter of them, whatever your process is, but ultimately just connect them with us. And then that way, a lot of times we can solve the problems that they have, talk about anything that they're unsure of, and get them going sooner than what they actually thought was possible. Buying a home is also buying a home is very simple and very difficult at the same time. Very simple in the sense that it's really just credit, income, and assets. Very difficult that a lot of people still have trouble with making sure that they have that credit, income, part established with the DTIs and stuff like that. There's a couple questions here. I've been getting a lot of questions about the Miami-Dade County Buying Program. That's MDEET. So you could utilize MDEET. The problem with MDEET is that you're going to get usually anywhere between 14,400 to 28,800, and it depends on your income. So if you're 80% below area median income, which is not many people, you'll get to 28,000. If you're above 80% AMI, you'll get 14,000. If you're going to get 14,000 from Miami-Dade, and it's going to take you 60, 70 days to close, you might as well utilize, if Hometown Heroes is not out, you might as well utilize Florida Bond, which is going to give you 10,000, but you're not going to pay any points, and you're not going to pay any tax stamps. So you end up saving that extra $4,000 that Miami-Dade is going to give you too. Because if you're going with Miami-Dade, you still have to pay tax stamps on your purchase, and you're still subject to whatever that market rate is. Okay, so that's usually what I tell people. There is another program that is from Public Housing Community Development, PHCD, which gives you that larger down payment, very similar to Broward County. That's also low income, and we will do that for a client, but most clients that we have, especially in South Florida, you're above 80% AMI, it's very difficult to put you into that other program. Yeah, it's PHCD. Deborah also asked about, I think she said Port St. Lucie. So St. Lucie County's income limit for Hometown Heroes is 137,550.
Mike, good morning. I saw something online about Port St. Lucie, $100 million that they're giving out. Is that individually, is that separate from all over Florida, or they have their own little special $100 million there?
No, it's 100,000. So they're giving up to $100,000 for St. Lucie.
100,000.
Yeah. They're giving 100,000. It is specific to them, and that's their program. You have to basically have a 640, 620, be a first-time home buyer. You have to be at below 120% of the area median income, which is about $100,000 a year, if I'm not mistaken. I have to double check. But there's also a minimum income that you're supposed to have. So usually there's maximum, but also there's a minimum. And I think the minimum is like 60 or 70,000 or something like that. So I will double check back to you, and then we'll talk about it next week. Because I haven't had time to do the research on it. I know it came out last week as well. But I know that there's a minimum income threshold, a maximum income threshold. So you like basically putting clients into a bucket this wide. And if they're doing 100,000, I'm pretty sure those funds are going to run out relatively quick. I think Palm Beach did the same. Was it Palm Beach? Yeah, Palm Beach did the same thing, and they were out of funds in like 3 weeks. Great question, because I forgot to put this in my notes. Is there any way around first-time homeowner requirement? Veterans and military still get an exception to this rule? Yes, they do. So if you have a veteran, they are not technically required to be a first-time home buyer. Another technical way around the first-time home buyer requirement is buying in a targeted area. The problem with that is it's very difficult for me to tell you exactly what area that is, or what areas they are, because they're little pockets, little neighborhoods across all the counties. So it would be very difficult for me to say you got to look here, 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 in order to see if you can, find something there. But yeah, technically, if you're buying in a targeted area, you don't have to be a first-time home buyer. And if you are a vet, you do not have to be a first-time home buyer.
I have a question.
Yeah.
With Hometown Heroes, is this something new where like there can be like a non-occupant co-borrower, or can you explain that to me?
Yeah, not necessarily new. It is like that where you can have a co-signer. So there's a difference between non-occupying co-borrower and a co-signer. You cannot have a non-occupying co-borrower. It has to be a co-signer. The difference is really one is on title, one is not. That's it. Non-occupying co-borrower means that they're not occupying the property, but they're still going to be on title and things like that. A co-signer is literally just a co-signer. They're going to help you with qualification, but they won't be on title. They won't have rights to the property, stuff like that. So you can have a co-signer. For Hometown Heroes, the co-signer's income is considered towards the income limit. For Florida Bond, it is not. Can buyers start looking now and go under contract while waiting on Hometown Heroes? Yeah, Felicia, I already have some clients under contract or closing July. By the way, so as long as you're closing in July, you're fine. We're gonna do the way that I do it is essentially get the loan in, put it as or submit it as a Florida bond loan, or as a regular. If they're above the income limit for Florida bond, I'll submit it as a regular FHA conventional. The client's going to see a higher cash to close, but it's so that we can get the process of underwriting going, because that's not going to change, right? Looking at the credit, income, and assets and stuff like that, and then getting the appraisal and title all in. And then what we're doing is literally making sure that we're ready so that July 1st on Monday, when the Hometown Heroes opens up, we can go ahead and lock them in and disclose it. That's it, because it's really just the difference of locking it in July 1st. So yes, you can technically do that. If you can use Florida Bond for non-occupying co-borrower, right? Yes, Florida Bond you can use as a co-signer, which we can leverage as well. I've done that in the past where somebody has a co-signer and that person makes a bunch of money. Let's say 150. The primary borrower may make 70, whatever. Your income is now 220. However, with Hometown Heroes, I have to use the 220 if they're both on the application. But with Florida Bond, since it's household income and that second person isn't living in the home, that 150 won't be counted towards the income limit. And that's how we kind of get around it. So we'll end up going Florida Bond and still giving that person $10,000. Does that co-signer for Hometown Heroes have to also meet the first-time home buyer qualification? If they're co-signers, no. If they're not living in the property, you don't need to meet that first-time home buyer qualification. Now, there's a question that I'm getting a lot as well from clients and from realtors is if one of them owns the home, if they're married, one of them owns the home and is on title and the other one isn't, can they do it? No. State of Florida, when you're married, what mine is mine, what mine is yours, what's yours is mine, very similar. Okay, as soon as you put married on the application, they will be looking and making sure that the other person, even if they're not on the application, doesn't own a home. You have to be both first-time home buyers if you're married. The only time that works is if you're not, right? You've been living together for 10, 11 years, but you're technically not married on paper. You may be able to get around that. But if you're married, you can't. Any other questions? No?
So Mike,
Yeah.
okay, like one of my clients, right? Both they're making about $200,000 plus. Same field, however, they make too much for Hometown Heroes. So that means one would have to apply, the husband or the wife, because they
Correct.
wouldn't. Okay.
Between both of them, if between both of them they're making 200,000, that means that one of them, that means that they're making 100,000 each, let's say, let's just call it that. Then yeah, you would have one of them apply.
Okay. What else you saying? Married. Okay, so even if that income totals the overtime and everything, or
Yeah,
if you
so
subtract the overtime?
exactly. It's whatever I put on the application. So with Hometown Heroes is whatever I put on the application. So if the overtime is what gets them to the 200,000, I wouldn't include that.
So what's the benefit if they're ready to say, okay, I can put down whatever it is, the percentage that they need to put down. So does it make sense to even use Hometown Heroes?
Depends on what they want to
How
qualify.
does that benefit?
Yeah. So it depends on what they want to qualify for. If I have to only use one of them on the application because using both of them will throw them over the income limit for Hometown Heroes, well,
Mhm.
that one person will have to qualify for what type of homes they're looking for. That's income ratio wise. If they do qualify, then it could work out for them. If they don't, and they want to be at, 700, 800, and we need both of them to do
Mhm.
that, then at that point, they got to decide home or down payment assistance.
Okay. All right. Thank you.
No problem. Any other questions before we get off?
No.
All right, perfect. Thank you all for joining us today. I will see you all next Monday. Have a productive week. Anything you need, we're here for you guys.
Thank you.
Thank you, Mike.
No
Thank you,
problem.
Mike.
Thank you.
Thanks. Have a great week.